Have you ever wondered why the stock market seems to behave like a roller coaster, rising and falling with no apparent rhyme or reason? Understanding the stock market might feel like trying to decipher a foreign language. But fear not, because today we're going to break it down in simple terms. Imagine a marketplace. Not the kind with stalls selling fruits and vegetables, but a place where people buy and sell pieces of companies. That's the stock market for you. Now, these pieces of companies, known as stocks, give the buyer a small ownership in the company. It's like owning a slice of a large pizza. But why do people buy these stocks? The simple answer is to make money. The price of these stocks fluctuates based on a lot of factors such as the company's performance, economic indicators, and global events. So buyers hope that the price of the stock they bought will increase over time, and when they sell it, they'll make a profit. However, the stock market is not just about buying and selling stocks. It's also about how these stocks are bought and sold. This is where brokers come in. They act as intermediaries between the buyers and sellers. They help facilitate the transactions, and in return, they get a commission. We also have what we call stock exchanges. These are places where stock transactions take place. The New York Stock Exchange and the Nasdaq are examples of stock exchanges. They provide a transparent and regulated environment for stock trading. Another important concept in the stock market is the stock index. This is like a thermometer for the stock market. It gives you a general idea of whether the stock market is hot or cold. It's a collection of stocks that represent a particular market or sector. For instance, the S&P 500 is a stock index that includes 500 of the largest companies listed on stock exchanges in the United States. Now let's circle back to our initial question. Why does the stock market behave like a roller coaster? The stock market is a reflection of the economy. It reacts to business news, economic reports, political events, and even natural disasters. All these factors influence investors' decisions, causing the prices of stocks to go up and down. To wrap it up, the stock market is a marketplace for buying and selling stocks. The price of these stocks fluctuates based on various factors. Brokers facilitate these transactions, and stock exchanges provide a regulated environment for trading. Stock indices give a general idea of the market's performance. And finally, the stock market behaves like a roller coaster because it reacts to various factors that influence the economy. Cracking the code of the stock market is no easy feat. It's a complex machine with many moving parts. But understanding its basic concepts is the first step towards making informed investment decisions. After all, knowledge is the best tool an investor can have.